Hello viewers, welcome back to my channel. Apple, the tech giant, is gearing up to announce its third quarter 2024 earnings report. This report is highly anticipated by many, as it will provide a clear picture of how the company has navigated the recent economic landscape. The markets are buzzing with anticipation, waiting to see how the company has performed. Investors, analysts, and tech enthusiasts are all on the edge of their seats, eager to dissect the numbers. Will Apple meet, exceed, or fall short of expectations? That's the million-dollar question on everyone's minds. The outcome will have significant implications for the stock market and the tech industry as a whole. Apple's earnings reports are closely watched by investors, analysts, and tech enthusiasts alike. These reports not only reflect the company's past performance but also set the tone for its future trajectory. They provide a snapshot of the company's financial health and offer insights into future performance. Analysts will be looking at key metrics such as revenue, profit margins, and market share. A strong earnings report can send Apple's stock price soaring, while a disappointing one can trigger a sell-off. The stakes are incredibly high, and the market's reaction can be swift and dramatic. The stakes are high for Apple, as it faces a number of challenges, including slowing global economic growth and increasing competition in the smartphone market. These factors add layers of complexity to the company's financial outlook. However, Apple also has a number of strengths, including a loyal customer base, a strong brand, and a history of innovation. These elements have consistently driven the company's success and will be crucial in the coming quarters. Join me as we delve into the details of Apple's upcoming earnings report. We'll explore the numbers, the context, and what it all means for the future of this iconic company. Before we look ahead, let's take a quick look back at Apple's second quarter 2024 earnings report, which was released on date of last earnings report release. This report has been highly anticipated by investors and analysts alike, as it provides crucial insights into the company's financial health and future prospects. Apple reported earnings per share of EPS from last quarter, beating missing analyst estimates for last quarter. This performance has been a key indicator of how well the company is managing its costs and generating profits in a competitive market. Revenue came in at revenue from last quarter, up/down percentage change year over year. This figure is particularly important as it reflects the overall demand for Apple's products and services across different regions and market segments. The results were generally viewed as positive-negative by Wall Street. Analysts have been closely monitoring Apple's performance, and their reactions can significantly influence the stock price and investor sentiment. Apple's iPhone sales were lower than expected, while its services business continued to grow at a healthy clip. The services segment, which includes the App Store, Apple Music, and iCloud, has become an increasingly important revenue stream for the company. However, there were some concerns about slowing growth in China, one of Apple's key markets. The Chinese market is crucial for Apple, and any slowdown here could have significant implications for the company's overall growth strategy. Overall, Apple's second quarter 2024 earnings report painted a picture of a company that is still performing well, but facing some headwinds. These challenges include increased competition, supply chain issues, and economic uncertainties in key markets. The question now is whether Apple can maintain its momentum in the face of these challenges. Investors and analysts will be watching closely to see how the company navigates these obstacles and continues to innovate in the coming quarters.
Analysts are expecting Apple to report earnings per share of analyst EPS estimate for Q3 on revenue of analyst revenue estimate for Q3 for the third quarter of 2024. These estimates represent growth decline of percentage change year over year. It's important to note that these are just estimates, and Apple's actual results could differ significantly. However, they give us a general idea of what Wall Street is expecting from the company. Some analysts believe that Apple could beat expectations, driven by strong demand for its new iPhone 15 lineup. Others are more cautious, citing concerns about the global economy and competition from rivals such as Samsung.
The iPhone is Apple's flagship product, and the upcoming iPhone 15 launch is expected to be a major driver of sales in the coming quarters. Rumors suggest that the iPhone 15 will feature a number of significant upgrades, including a faster processor, an improved camera, and a new design. Apple is also rumored to be working on a foldable iPhone, which could be released as early as next year. A foldable iPhone would be a major innovation for Apple and could help it to regain market share from Samsung, which has already released several foldable smartphones. The success of the iPhone 15 will be crucial to Apple's overall performance in the coming quarters. If Apple can deliver another hit iPhone, it should be able to maintain its growth trajectory.
Section 5, Beyond the iPhone, Apple's ecosystem strength. While the iPhone is Apple's most important product, it's not the only one. Apple's ecosystem is vast and interconnected, creating a seamless experience for users across all their devices. Apple also generates significant revenue from its services business, which includes the App Store, Apple Music, and iCloud. These services are integral to the user experience, offering convenience and enhancing the functionality of Apple devices. Apple's services business is growing rapidly and is now the company's second-largest revenue generator after the iPhone. This growth is driven by the increasing number of users subscribing to these services and the continuous expansion of Apple's service offerings. The services business is also highly profitable, with gross margins that are significantly higher than Apple's hardware business. This profitability is crucial for Apple's overall financial health and allows the company to invest in new technologies and innovations. The growth of Apple's services business is important for several reasons. It not only boosts the company's revenue but also strengthens its ecosystem, making it more attractive to new and existing customers. First, it helps to diversify Apple's revenue streams and reduce its reliance on the iPhone. This diversification is essential for long-term stability and growth. Second, it provides Apple with a recurring revenue stream, which makes its earnings more predictable. Recurring revenue from subscriptions ensures a steady flow of income, even during periods when hardware sales might fluctuate. Third, it gives Apple a competitive advantage over rivals such as Samsung, which do not have comparable services offerings. This advantage helps Apple retain customers and attract new ones, further solidifying its position in the market.
Section 6. The power of the Apple brand. Apple is one of the most valuable brands in the world. Its products are known for their quality, design, and ease of use. Apple also has a very loyal customer base, which is willing to pay a premium for its products. Apple's strong brand gives it a number of advantages. First, it allows Apple to charge premium prices for its products. Second, it makes it easier for Apple to introduce new products and services. Third, it gives Apple a competitive advantage over rivals such as Samsung, which do not have the same brand recognition.
Market analysts and experts have weighed in on Apple's upcoming earnings report, offering a mix of optimistic and cautious perspectives. Others express concerns about the macroeconomic environment and potential slowdowns in consumer spending, which could impact even a giant like Apple. Some believe that Apple's strong brand, loyal customer base, and upcoming product launches position it well for continued growth. Many analysts view any potential dip in Apple's stock price as a buying opportunity, highlighting the company's long-term growth potential. Despite these concerns, the overall sentiment towards Apple remains positive.
Investing in the stock market always carries risks, and Apple is no exception. However, Apple has a number of factors working in its favor, including a strong track record of innovation, a loyal customer base, and a solid financial position. If you're considering investing in Apple, it's important to remember that past performance is not necessarily indicative of future results. However, Apple's history of innovation and its strong brand suggest that it is well positioned for continued growth in the years to come. The stock market can be volatile, and Apple's stock price is no exception. Apple's stock price can fluctuate significantly in the short term, driven by factors such as earnings reports, product announcements, and overall market sentiment. If you're considering investing in Apple, it's important to be prepared for potential volatility. Don't panic if the stock price drops in the short term. Instead, focus on the company's long-term fundamentals.
So, should you buy Apple stock? The answer, as always, is that it depends. It depends on your investment goals, your risk tolerance, and your assessment of Apple's long-term prospects. If you're looking for a high-growth stock with the potential to generate significant returns, Apple is worth considering. However, if you're risk-averse or you're looking for a stock with a steady dividend, there may be better options available. Remember to consult with your financial advisor to make informed investment decisions.